sitting right next to me. This show is the last place you're ever going to hear any navel-gazing about the Federal Reserve. However, we'll break the rule this morning. Janet Yellen speaks this afternoon, and interest rates will be right up there as the subject. Kevin Kelly, first of all, I'm not going to ask you what you think the Fed's going to do. I'm going to ask you, why are you all in cash?
Two big reasons why. We saw at the end of last week, we saw earnings were down the largest they have been since 2008 on a year-over-year basis, 11.5%. You take out some of the BP, let's say 7.5%. Okay, volumes are down, as well as what's led to the rise since the February lows? Buybacks. The buyback index is up over 5% compared to the regular market. So it's been companies buying their own shares. They're going to have to stop doing that because earnings season is coming out.
Okay, so basically you don't see anything that's really valid in propelling the Dow.
Nobody's buying the market. Volumes are at an all-time low right now.
Okay, Todd Horwitz, comment on the Fed, please, because you're a sharp-edged critic of the Federal Reserve. I know that. Central banks the world round. You don't like them. What do you think she's going to say this afternoon?
I think she'll say nothing as usual. She'll double talk as it typically happens. But the real question I have, Stuart, is if we're only data dependent, according to Janet Yellen and the rest of the Fed, why are they out talking? There's 3 or 4 of them talking today. What are they going to talk about? All they're going to do is try to manipulate the markets in one direction or another, because that's all they've done for the last 7 years is come out and talk about nonsense instead of really truly being data dependent and trying to get the economy back on track.
That's true.
So I think she's a bunch of nothing.
But we will be glued. All investors, all the traders, they'll be glued to this. They're reading between the lines, reading the tea leaves. You know that's what they're going to do. And it probably will move the market too.
Yeah, but it's not working because we 100%. Haven't had an all-time high in 10 months. So they can keep talking, but it's not leading to returns in the market.
All right. How about the price of oil? Earlier this morning, we were at $38 a barrel. We are now at $38.10, down $1 and change. Barclays, an investment firm, they say, watch out, oil's going to go down to the low 30s again because of oversupply and demand, that relationship. So back to you again, Todd. You trade this stuff. You think we might go back down to the low 30s for the price of oil?
I think oil looks to be possibly 36. Low end, I think, is 34. I don't see we're going much lower than that. I think we've already pretty much priced in all that news that Barclays is trying to pitch out here. And one of the things with a lot of these bigger investment banks is they're actually trying to look for a spot to buy it and really kind of push the price down. That's my opinion of what they're looking at.
But I'm looking at the energy stocks, and it seems that the investors in those energy stocks are listening to Barclays because they're down big time. Look at Chesapeake down 7%, Transocean 4%. Big percentage losses there for big name companies.
They're also trading at really big high multiples.
That's true.
So you got to be steer clear of those.
Okay. I wouldn't touch them with a 10-foot pole.
They both lose money.
All right, I'm not touching them with anything with a 10-foot pole right now.